A very good morning to all our viewers who have tuned in to Buy Now, Sell Now on ET Now. I'm Shrishti Sharma and with me today is Vinny Motiwala. And viewers, you know that this is the show where you get all your stock-related queries answered by the expert. You can connect with us on Twitter as well as you can also see our programming at etnow.com. As well as we are also live. You can also catch us live on TV, and you can also connect with us on the WhatsApp number that will be flashing on your screen a short while from now. But before we start taking all your stock related queries, let's have a look at what the markets are up to. So Winnie, once again we are drifted in the red territory. So one thing is for sure that the markets are finding it a bit tough to hold on to the higher levels.
Absolutely, Shrishti. Volatility I think will be the word for the week because it's the expiry coming in as well as the year end. So a lot of things will be happening in the market, and Nifty again is not sustaining to that 17,000 mark that we saw yesterday. Look at the Nifty, 16,933 levels, trading almost near the day's lowest point, like you can see coming in your screens. Even the Sensex as well as of now is down 0.2% in trade, down more than 100 points there as well. The broader markets are underperforming the benchmark indices. Look at the mid-cap space, that is down almost 0.6% in trade, while the small-cap space is down 0.8% in trade as well. Small-cap space actually in the last couple of trading sessions has also been a bit weak when you look at it and has been underperforming clearly in terms of that as well. Now, in terms of the names that are doing well and the names that are falling in trade, the laggards, we do have Adani Ports, Adani Enterprises, BPCL, Bharti Airtel and Hero Moto, which are down more than 2%. Adani Ports is actually down as much as 6% as well. Look at the gainers today we have in trade. We do have Hindalco, IndusInd Bank, Dr. Reddy's, which are passing in trade as well. So let's keep an eye out on this as well. When you look at the sector-wise as well today, all sectors as of now are trading in the red, and the main laggard being the Nifty Media and the Nifty Auto, which are seeing cuts of more than 1% as well. Shrishti.
Well, that's how the markets are panning out. But let's move on and shift focus to the buy now, sell now lens topic today. And today we're going to be talking about the hotel industry because there are a lot of demand drivers at place right now for the hotel industry when it comes to the wedding season. G20 summit meetings are happening. ICC ODI Cricket World Cup is there, and we are seeing resumption of the foreign travel. So all these are demand drivers, and also there's a news flow as well as report. Focusing on Charlotte Hotels, the company has acquired Duke's Resort for an enterprise value of 133 crores. That's the update coming in from Charlotte Hotels. We have also spoken with the management of Charlotte Hotels. We'll tell you what are they highlighting about the demand going ahead. But before that, let's have a look at what's UBS, brokerage firm UBS view coming in for the hotel industry. They say that particularly on Indian hotels, they have published a report where they maintain a buy rating for a target price of 400 rupees. They say that the management see no signs of momentum slowing down. Traditionally, Q3 is seasonally better for India in terms of the marriage season and India's hospitality remains a strong growth story, and the pricing remains strong even in Q4 as we have entered, and visibility through the mid-May is also quite good, is what UBS is highlighting specifically for the hotel industry, as well as Ambit on the Indian hotel industry overall says that there are structural levers for the industry and that can grow beyond calendar year 2023, and the valuations reflect growth, longevity as well as improved pricing. So brokerages are turning positive on the hotel industry as well as on the Charlotte Hotel news flow, like we have been telling. So we'll try to get a view from our experts what's their outlook on the hotel industry and what are some of their favorite picks. But before that, let's have a look what Charlotte Hotel management, the MD and CEO Sanjay Sethi spoke with ET Now on the demand outlook going ahead. Let's hear him out.
We're not seeing any pinch at all on the demand side. The occupancies continue to be robust. The average room rates continue to be growing. We've had high acceptance of annual contracts, which are significantly higher than the previous years by corporates. So I think as of now, things look positive. We do have the global threat of the economic crisis that looms over everyone. But, for now, at least we see no negative impact on the hospitality industry. You must remember the domestic demand for within India is so strong that we expect that to sort of sustain us over the next few quarters. Overall, we see this for the foreseeable future which is roughly around 5-6 years from now, we expect the demand-supply patterns to be favorable for growth.
Okay. That was the management of Chalet Hotels. But let's bring on board our experts for today. We have Sharmila Joshi joining in with us, as well as Kunal Bothra as well. A very good morning to both of you all. And, Sharmila, I'm going to come to you. There's a lot of action that is happening in the hotel space as well. It's time, wedding season time, plus summer season, so holidays coming around as well. Demand is picking up as well. How should we be viewing the hotel space? What are you liking in this hotel space? Will this demand continue?
It looks likely that the demand will continue, and there are a couple of reasons for this. One, I think, obviously during the pandemic, there were, I think, barring one or two hotels, nobody really did any expansion because everything was put on hold. I mean, the entire tourism was put on hold, so there was no question of anybody really expanding or building new rooms or hotels or anything of the kind. So now, 2 years down the line, when we are experiencing this open up trade, there is an obvious gap between demand and supply. So that is what we are seeing, and all the popular destinations are getting booked out really early, etc. Also, I think since in the 2 years there was no sort of increasing tariff from the side of the hotel industry, coming into this sort of holiday season, and what we've seen, wedding season, etc. We've seen even in what were considered to be lean quarters for the hotel industry, we've seen the likes of Indian hotels take hikes in their room charges. So, revenue per room, etc. All these parameters are doing much better for hotels. So, also, I think we have a couple of big events coming up. We have the Cricket World Cup, which will be later on in the year. Then we've had G20 presidency this year. So, they sort of seem to travel all over the country, and there are a whole host of meetings that take place, at different locations. I'm sure all of us have seen those banners welcoming G20, etc., in various smaller cities as well. And they will all culminate somewhere end of the year when there will be another big conference in New Delhi. So, that pretty much sort of sums up what's going to happen. So you're going to have holiday season, then cricket, then something or the other that's going to keep the demand good for hotels as a sector. So the two stocks that I like within the space are Indian Hotels and Lemon Tree, and I think both have very different models. With Indian Hotel, you're talking more luxury, and that's obviously doing well. And you hear of even in a city like Mumbai, the kind of astronomical rates that Indian hotels could charge for a room last year. And Lemon Tree, on the other hand, which is a much more asset-light model, and they're managing properties, etc., and they're also doing well. So those would be the two stocks that I would like.
So, Sharmila just highlighted what are some of the demand drivers for the hotel industry, as well as Indian hotels. Our Lemon Tree are the two picks coming in from Sharmila. But Kunal, coming to you, what's your take on the hotel stocks? Because recently, with the carnage in the market, I was just looking at some of the hotel names. At least Indian hotels as well as Chalet hotels have not seen that much of a sell-off from its maybe 52-week high levels. So, going ahead with the rebound in the market that is expected, do you feel that these hotel stocks can do better?
Good morning, Srishti. Good morning, everyone. Yeah, I think my belief is that these stocks should, they've done reasonably good over the last many months, and they would probably continue to perform quite, smartly over the next maybe foreseeable future. But because, stocks like Indian hotels, for example, the charts which I've displayed on the screen, the stock has done exceptionally well. So, look at it this way, from 200 levels, the stock moved up to as much as 350 plus mark, almost 6-8 months back. From there, when the base has been rising up so significantly higher, the stock is bound to get into a time-wise correction. Look at the classical time-wise correction for Indian hotels, and that support is rising at the 280, 290 mark. We've seen over the last few weeks that the stock tries to get into a bounce process whenever it comes closer to 300 levels or maybe sub 300 mark. So I believe that 280 is a very strong support for someone who's been waiting to buy Indian hotels, for example. I think 280, 285, whenever the stock comes back to that level, could be a very good value buy for the stock price, specifically looking at the longer term trends and expecting that the stock would take a lot of support at those levels and bounce back quite smartly.
Okay, thank you so much for that, Kunal. But on that note, we're going to slip into a very short break. Viewers, don't go anywhere, because we'll be back and we will be taking all your stock related queries after this break. Buy now, sell now on ET Now. Before we start with your stock related queries, let me go across to Sharmila and ask her one of the most important questions that we always wonder about. Sharmila, is that what should we be doing with the volatility? Look at that continuing in the markets, are the ups and downs today. Also, again, we are seeing a bit of a fall coming in. How should we look at protecting ourselves? What should one be doing during this volatility as an investor, Sharmila?
I think the advice remains the same, but probably what the only change I would make to the advice of being stock specific and buying in a staggered manner would be to now really sort of be a little more cautious and to probably try and buy on dips, because I think it's very clear that the kind of grinding down that we have seen in the market, it seems to suggest that we are headed for lower levels. So I think whether you're a longer term investor, especially if you're a longer term investor, it makes a lot of sense to try and buy a good stock. You will obviously never be able to guess a market bottom, but try and buy it at decent valuations, because then you will be able to ride the entire up move. Which is why I'm suggesting a staggered buying, because as I'm saying, you will never know when markets are bottom. But I think you need to sort of keep buying. And again, I think the other difference that I would make is that rather than buying, stocks where you are expecting something to do better, do something where you already see good results and a continuation of good results going ahead. Because clearly that trade where you expected a recovery and then something to start doing better, that I think will be once you start seeing markets stabilize. So sort of stick to the tried and tested, where the results are good, where you're expecting something to do well going ahead, and which is available at good value.
Okay, so that's the wise advice coming in for all our retail investors. But viewers, let's move on and kickstart taking all your stock related queries. You can write to us on a WhatsApp number that will be flashing right on your screen. And taking the first query that I have is coming from Bhagwan from Mumbai. And Kunal, this one is for you. He says that GSFC was the one counter that was on your radar, and he actually bought these shares 500 quantity at an average price of 126 rupees. Since he's at a loss, he wants to know what to do next. Is that a hold or average out at these levels? Were you tracking this one?
Well, yeah, I was. In fact, that was a time when the stock was actually doing pretty well. From 126, the stock at one point had even risen up to I think 150, 52 mark. But yeah, I think if you've bought at levels of 126, the stock is at 117. It still looks quite quite a chart which is a bit more sideways even at current levels. I would not suggest an averaging out at current levels, but you can hold your existing quantity. I think on the way up, in case if the stock say comes back to a 3-day swing high, maybe crosses back about say 120, 121 mark, that could be a point where you may look to average, because that's the time where I would believe when the stock comes back into momentum, that you would get back into a break even much more quicker. So buying on a breakout could be a better strategy for GSFC. You can hold on to your existing quantity. Above 121 is where you can look to average.
Okay, Sharmila, the next query is coming in from Siva, and this one is on Chennai Petrochem. They want to know the long-term view on this one. They are holding 700 shares at 252 rupees.
Yeah, so I think they can continue to hold. The results last quarter were fairly decent, and valuations also seem fairly decent at this price. My target would be closer to 290. So I think yes, they can continue to hold.
Okay, Kunal, once again, this query is for you. Question is from Satya Veni, and though he's a long-term investor, he has invested in Zomato, 1,000 quantity at a price of 87 rupees, and the other stock he has is L&T Financial Holdings, 700 in number at a price of 120 rupees. Sitting at a loss in both of these counters, seeking your advice, what to do next. Is that an average at these levels?
I would recommend a hold for both of them. L&T Finance, I think maybe closer to 75, 77 mark could be a zone where you may look to average. Zomato, I think at 50 levels, the stock has found very good support. It's been trading at this 50 odd mark for quite some time, but I believe that that's a zone where you may look to average. If you're a long-term investor, then I would believe that these could be very good levels. So 50 approximately for Zomato where it's currently trading, and 75, 77 for L&T Finance. I think these are two very important levels. If the stock, if you're looking at a longer term kind of a play, then you should look to average at these zones for both of the stocks individually.
Sharmila, the next query is coming in from Piyush and from Delhi. This one is on India pesticides. What's your long-term view on this one? Their time horizon is around a 5-year period. They've not said whether they bought the shares, but I think they may be looking to buy the shares. So what should they be doing then?
So I've never really tracked this stock specifically, but overall I'm quite positive on the pesticide and agrochemical space. Uh, uh, this stock seems sort of average. Last quarter, the numbers don't seem to have been particularly good. So I think if you had it, hold it, but I wouldn't really buy it if I didn't have it.
Okay, so that's the view coming in on India pesticides. But moving on, and Kunal, once again coming to you. Questions from Veni. She's a senior citizen from Hyderabad and holding Tata Power shares 500 in number at a price of 126 rupees, as well as she's also holding BHEL at a price of 78 rupees. At a loss in both of these counters, is that a sell, hold, or average?
I think both the stocks are good enough. I would believe that you should look to hold on to both of these names. Tata Power, I think, yes, going through a bit of a short-term pain. Currently, the stock has fallen sharply in the last couple of days. But this is what typically happens for stock prices which have been holding their strong support levels for months and for quarters. Tata Power had been holding up pretty well at the 200 mark. I think multiple attempts for the stock to breaking below the 200 levels, and that has actually resulted into the stock going into a bounce. It's just in the last couple of days the pace of correction for Tata Power has intensified. Maybe there could be a bit of more follow through on the downside. But if you're a long term investor, then I think you should look to hold on to your existing quantity, maybe around this 170-75 mark. In case if the stock corrects further to those levels, that could be a zone very well to average. Same would be the case with BHEL. Would suggest a hold on the stock. My sense is that the stock has given a strong quarterly breakout in the fag end of 2022 calendar year. So I think post that the stock has gone through a mild correction. The chart patterns are still looking very attractive for BHL on a quarterly perspective. So I think in that regard, I would suggest a hold on that stock as well.
Sharmila, next query is on Reliance Industries. Vipun from New Delhi wants to know, is it a good time to invest in Reliance Industries at the current level for the long term of 2 to 3 years?
I think, but just keep in mind my earlier advice of trying and buying on dips. The stock in any case is quite close to its 52-week low, but there is, I think, a distinct possibility given the way markets are that you will see it test that low and maybe go lower. I don't think that that is something that can be ruled out. But given the fact that if you're looking to add, this is a great time and try and make this a part, the stock a part of your key portfolio, because I think this is precisely the kind of stock that you should be invested in for the longer term.
Okay, Kunal, once again, the query is for you. I guess a lot of viewers have missed you yesterday when you were not there. So the next question is from Venkat Rao, and he's a long-term investor and purchased shares of IRCTC at a price of 810. And the other counter is IDFC First Bank, 2,000 shares at a price of 59 rupees. Can he average both of these shares?
Well, if you're a long-term investor, then definitely yes. I think for IDFC First Bank, I would be clearly very bullish on the longer-term time scale. I think the stock has confirmed breakouts on multi time scale charts on a quarterly basis as well as on a half-yearly basis. So if you're a long-term investor, then I think these mild corrections or mild phases of heightened volatility has to be taken in strides where you look to average the stock further. IRCTC, on the other hand, I think the only concern with a stock like IRCTC is because that the stock has gone through historical higher periods of range bound action. So, for example, I think in 2020, 22, the stock was going into a sideways range for quite a number of months on a trot. And post that is where you saw the stock getting into an upward trend, moving up to I think 1,000 plus levels. And from there, the stock has corrected. Now at the 600 mark, maybe plus or minus 10% from those levels is where the stock is consolidating. So only if you're a long-term investor and if you're ready to hold the stock for patiently, then I think it makes sense to average IRCTC. IDFC First Bank particularly, I'll be pretty confident and would suggest an averaging even at current levels.
Okay, Sharmila, the next query we have is from Hemant, and this one is on two stocks. One is they're holding Colgate Palmolive 30 shares at 1,595 rupees, and they're holding 183 shares of Manali Petrochem at 92 rupees. What is the view on these stocks for the next 3 to 5 years?
So for Colgate, it's a positive view. Overall, I think that if there is one sector that will sort of uh, be good, even in the kind of volatile environment that we're seeing, then it's obviously the defensive plays, FMCG, pharma, etc. And Colgate within that space is a leader in the space that it's in. So I think that's a definite hold and probably should be part of your portfolio. With Manali Petrochem, the view would be if you didn't have it, I wouldn't buy it. But if you had it, yes, possibly you could hold with keeping in target a mind of about 65, 70.
Okay, Kunal, the next question is on Vector Foods. Recently, I've been tracking this counter, and you also got a great move on this particular counter. But in the past few days, the stock has actually fizzled out, and Jay Krishnan entered this stock at a price of 549 rupees. What should he do next? Any hopes on reversal or any upside move that is pending for the medium-term outlook?
Very bullish on the stock earlier as well, and we've flagged out numerous times on the channel that I think this has been one mid cap name which looks very attractive. The stock has done exceptionally well from 450, 470 odd levels. When we spotted up, the stock at one point was almost at the 575 mark. Now I think at current levels it's completing a phase of retracement. Now these are actually opportunities where traders who have earlier missed out or wanting to buy the stock should be looking to buy. Now if you bought at levels of 540 for example, I think maybe closer to 500 mark where the stock will probably complete a retracement of its 200-day moving average. That would be a point where I think you should look to average further, try to bring down the cost price. The chart structures for Vector Foods is very, very attractive from a long-term time scale. So I'm not sure if you're okay holding on to the stock from longer term, medium term to long-term time frame charts. But I think if that's the case, then I think you should look to hold on. Closer to 500 is where I would suggest to even average.
So that's the take coming in on Vector Foods. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back and we'll be taking more of your stock-related queries. Stay tuned. Stock-related queries answered by the experts, and continuing the same, the next query that I have, Sharmila, is coming from Balin, and he says he has two counters. Firstly, it's ABFRL. He bought these shares at a price of 295 rupees, and Brigade Enterprise from a price of 465 rupees. Question is, should he hold or sell to set off the capital gains as 31st March is approaching? So what's your view on this question?
I have no view on the capital gain angle. But in terms of stocks, I do like Aditya Birla Fashion. I think that the numbers that they're doing, the strategy that they have, and overall, I think that people are returning to stores, and they would. We did have a period of 2 years where a lot of buying had shifted to online, but now, especially at times of festivals, weddings, etc., and ABFRL does have presence in all the segments really of clothing. According to me, this is a stock that should be able to capture that going ahead. I think all mid caps have corrected, and this has corrected in line with that. Again, where Brigade Enterprise is concerned, if I look at their numbers and the valuation it's trading at, it seems reasonable. So both stocks from a fundamental perspective are a hold. As I said, I have no comment on the capital gain angle.
Kunal, the next question we have is this one from you, is from Padmaseva Rao, and they want to know Indigo Paints. How is it looking at the current price? Should they look to buy more?
Well, yeah, I think Indigo Paints has been a stock which has been actually going through a correction. I think today also the stock is down some 0.5%. I was actually looking at the charts for many of the other paint stocks, but then with the fluctuation in crude oil prices is not actually helping the sector as such. Indigo Paints, I would believe that could be a good buy only if the stock breaks past above its 50-day moving average. As of now, the 50 DMA is at 1100 mark. The stock, I think, is almost at 996 levels. So, which means that let the stock first give a confirmation of a breakout about that 1100 levels, and then I believe it could make a good buy. Otherwise, it could be a stock which has over the last many weeks gone through a time-wise correction, but it may continue to drag lower. So it's always better to buy the stock on a confirmation of a breakout, because then we can expect that that downtrend where the stock has been going through over the last so many months, so many quarters, that could probably get completed.
Okay, moving on, and Sharmila, coming to you for next one. Debashish Das invested in the shares of Infosys back in 2005, and since then has been enjoying dividends, the share price jump up, and sitting at great profits right now. But he wants to know what to do next. Is that an exit at this point in time, or he can still continue invested in this counter for the next 5 years? What's your outlook?
So I think there's denying the fact that IT as a sector is going through some amount of volatility, and we had expected that by December we will see some sort of cue from the US economy in terms of whether they're going to have a hard landing, soft landing. That was the debate. But the way that the American economy has been, and why American economy obviously is important, is that they are the largest customers for most of our IT export-facing stocks. And within that space, BFSI is a very important sector, and both seem to be under some sort of pain or volatility because of the current interest hike and situation in the US. So I think my advice would be to stay put. Let's wait for their numbers. You will hear from them, I think, within the next month or so. And let's hear the commentary more than the numbers, because that I think will give us an indication as to how they are assessing the situation in the US and globally, and how their order picture is holding up. Because at the last quarter, I really saw no cause for concern. So let's hear them out and then take a call. But broadly, I think that the second half of this year will be better for IT companies, and for me, they remain.
Okay. Okay, let's just go across and cut across